You might be surprised to learn where some of the hottest stocks are hiding these days in the age of AI.
Mm,
And no, I'm not talking about the obvious ones like, everyone talks about NVIDIA.
right.
We're going on a deep dive today,
Okay.
guided by an article from AI Spirit News Talk,
Okay.
to uncover how this AI gold rush is spilling over into some pretty unexpected places,
Interesting.
creating opportunities you might not expect. So get ready to explore why a utility company like Vistra, for example, is suddenly outperforming even these huge tech giants
It certainly has been remarkable to witness.
in this AI-powered market like crazy.
Yeah.
Our source tells us Vistra's share price has surged
Oh, wow.
by an incredible 245%
Really?
this year.
Wow. This year alone.
This year alone. Crazy.
Yeah.
That's wild.
And that's even more impressive when you consider that NVIDIA, a company synonymous with AI, only saw a 150% increase.
Yeah, in the same time frame. So what's going on here? Why is a utility company like Vistra, I mean, this is a sector not typically known for its exciting growth, suddenly stealing the show?
It all boils down to the massive energy demands of AI.
Oh, okay.
These data centers that power all of, all these amazing AR tools that we keep hearing about,
Right.
they require a staggering amount of electricity to keep them running.
Yeah, 24/7 those servers are going.
24/7, exactly.
So Vistra is essentially keeping the lights on for the AI revolution.
Exactly. And they're not alone. Companies like Constellation Energy, another utility player,
Okay.
they're also experiencing remarkable growth, up 135% this year. So this isn't just a coincidence. It's a clear sign that the AI boom is having a ripple effect on the entire utility sector.
So I'm starting to see the connection here. While everyone is focused on the latest AI software or, the chip manufacturer,
Right.
these utility companies are quietly becoming the powerhouses behind the scenes.
Yeah, there.
It's a classic case of looking beyond the obvious to find the hidden opportunities.
And to illustrate that point, consider the Utilities Select Sector SPDR ETF.
Okay.
It's a basket of utility stocks,
Okay.
and it's up nearly 30% this year.
Wow.
That's pretty unusual for a sector that's known for its steady but not explosive growth.
Yeah, definitely not explosive.
Yeah.
Steady, we know that about utilities.
Right.
So it seems like the market is starting to recognize the crucial role these companies play in the AI ecosystem.
Yeah, I think so.
But is this surge sustainable?
Right.
Or is it just a temporary blip driven by, the hype? Everyone's talking about AI. Maybe they're just,
Yeah, that's the million-dollar question, isn't it?
right.
And to answer that, we need to dig a little deeper into the fundamentals.
You're right to question that. So how can listeners tell if a company like Vistra is genuinely set for long-term growth
Right.
or if it's caught up in a temporary bubble?
Yeah.
Because everyone's talking about AI. Is it just hype?
That's where understanding valuation becomes really crucial. One of the key metrics that investors use is the price to earnings ratio.
Right.
Or, you'll hear it as PE ratio.
Right, the PE ratio.
Yeah, and essentially it tells you how much you're paying for every dollar of a company's earnings.
Well, okay. So let's break that down because, PE ratios
Yeah, it can sound...
can sound a bit intimidating.
Yeah, it can sound a little bit intimidating. But it's actually pretty straightforward.
Right.
Think of it like this. You're essentially buying a slice of a company's future profits.
Okay.
Right. So a high PE ratio means that investors are willing to pay a premium for those earnings because they're expecting significant growth in the future.
Right.
On the other hand, a low PE ratio might suggest that investors are a little bit less optimistic about the company's future prospects.
Okay. So in the case of Vistra
Right.
and Constellation, their PE ratios are
Pretty high right now.
pretty high right now.
Yeah.
Okay.
Exactly. Constellation, for instance, is trading at over 30 times its estimated 2025 earnings.
Wow.
That's significantly higher than, its historical norms, which could be a sign that the market is getting a bit ahead of itself.
So even though these companies are benefiting from the AI boom,
They are.
there's a risk that their stock prices might be inflated by the hype.
Precisely. Our source from Sentiment Trader, they even use the term overextended to the upside,
Okay.
which suggests that, a correction might be on the horizon.
And to add to that uncertainty, our source also quotes their senior research analyst, Dean Christians,
Right?
who says, it's anyone's guess whether this is all AI-driven, a reaction to the Fed, or something else entirely.
Yeah.
So even the experts are having a tough time here pinpointing the exact cause of this surge.
And to put things into perspective, Wall Street analysts are only predicting modest growth for utilities overall, about 3.2% over the next year.
Okay.
Compare that to the energy sector, which is projected to grow by over 20%.
That's a pretty big
Yeah, it is.
big difference.
It is, and it suggests that, while the AI connection is real, the market might be overestimating its long-term impact on utility stocks.
Right.
This doesn't mean that all utility companies are bad investments. It just means we need to be discerning and look for those that are reasonably valued and well-positioned for long-term growth.
So where should we be looking? Are there any bright spots in the utility sector
Sure.
that haven't been swept up in this AI frenzy? So are there any places we should be looking,
Sure.
any bright spots?
Yeah. Our source mentions companies like Duke Energy,
Yeah.
Dominion,
Okay.
and Consolidated Edison.
Got it. Okay.
Those are all excellent examples. They're established utility companies. They've got solid track records,
Right.
and they offer something that's particularly attractive in today's market.
Okay. What's that?
Dividends.
Dividends. Yeah.
That is.
Remind us, what are those again?
Essentially, it's a portion of a company's profits that they distribute to their shareholders.
Okay. Okay.
So even if the stock price doesn't skyrocket, you're still earning passive income
Right. Right.
from those dividend payments.
That makes a lot of sense, especially if you're looking for a more, I don't know, like stable, predictable return.
Exactly.
Okay. Yeah.
And what's interesting?
That's it.
Our source mentioned that eToro, they did a survey,
Okay.
and they found that retail investors are still underinvested in utility stocks compared to sectors like tech and energy.
That's a curious discrepancy, isn't it?
It is. It suggests that there's a gap between how the market is valuing these companies
Right.
and how individual investors are perceiving them.
So this could be a chance for savvy investors to,
Potentially.
potentially
Yeah.
something to consider. But as always,
Yes.
it's crucial to do your own research and make sure any investment aligns with your personal risk tolerance
Right.
and financial goals.
Couldn't agree more. Speaking of looking beyond those obvious players,
Yeah.
our source also mentioned Super Microcomputer. Now, they're not a utility company.
Right. But they're making some big moves in this whole AI space.
Absolutely. They've partnered with Japanese tech giant Fujitsu to develop energy-efficient servers,
Okay.
specifically designed for generative AI. It highlights how this whole AI gold rush is creating opportunities across various industries. It's
Not his
the
risks.
It's not just limited to chip manufacturers like
Wow.
NVIDIA.
Right. Exactly.
Yeah.
And speaking of ripples, it seems like even like the e-commerce giant Amazon
Oh, wow. Yeah.
isn't immune to the impact of AI
Right.
on, consumer spending and all that.
That's right. Morgan Stanley analysts suggest that Amazon's focus on lower-priced essentials, potentially driven by, AI-powered cost optimization, might affect their holiday profit margins. It goes to show that this AI revolution is multifaceted.
Yeah.
It's not just about this, groundbreaking technology.
It's changing everything.
It's about how that technology is changing business models,
Mhm.
consumer behavior,
Yep. The whole
ultimately the entire, economic landscape.
whole landscape.
Yeah.
So to wrap up our deep dive into the AI-powered stock market surge,
Yeah.
what are some key takeaways
Okay.
our listeners should keep in mind?
Firstly, don't just follow the hype.
Okay. Don't get caught up.
Right. Look beyond the obvious players.
Okay.
Consider those ripple effects of AI,
Yeah.
on different sectors like utilities.
Love it.
Secondly, valuations matter.
Uh,
A high PE ratio might, signal overenthusiasm. So, proceed with caution.
Be careful out there.
Yeah.
Okay.
Yeah. And lastly, don't underestimate the importance of dividends,
Right.
especially in volatile markets,
Right.
They can provide that cushion of stability, that passive income.
Excellent advice. As always, the key is to stay informed. Do your research, make informed decisions that align with your financial goals. This AI gold rush, it presents some exciting opportunities, but as we've been talking about, it comes with its own set of risks.
Absolutely.
Yeah, it's a fascinating time to be an investor, and we hope this deep dive has equipped you with the knowledge to navigate this evolving landscape. Until next time, keep exploring, keep learning, and we'll catch you on our next deep dive into a whole new world of fascinating discoveries.